Okay, we are live. And you will see that we don't have our usual host, Peter. I am playing in Peter's role today. I'm his usual guest, or one of his guests, Todd Anderson, Chief Product Officer at LendIt. Today, we want to wish Peter a happy birthday. So he's taking the day off. We've given him the news show off, and going to forge without him. And so joining us today is John White from LendIt's editorial team. John, if you want to say hello.
Hello there, and I'm wishing Peter well on the slopes, assuming he's skiing as we speak.
And back joining us again, a longtime contributor, Kat Utech. Kat, if you want to just give a quick 30 seconds.
Yep. Happy birthday, Peter. I'm shocked you're not here with us. I feel like Fintech News is a gift that we keeps giving every single week. So looking forward to giving you that gift, and hopefully you're watching today. For those of you that don't know me, I'm Kat Utech at Core Innovation Capital, investing in early stage companies where the whole philosophy is mercenary returns through missionary investments in financial services and insurance technology. And excuse my allergies. I said I sound like a 70-year-old smoker from Long Island, but don't worry, it's not COVID.
From Long Island.
Yeah.
You have to.
That's oddly specific.
Yeah, it's that like kind of nasal.
That's where I live, so it feels like you
my
are.
relatives are from there, so I can say it, and I always can hear them. I'm like, oh, I like it. Are you sick, or that's your sound?
Well, I'm born and raised and still live there, so.
Nice.
Okay, so we're going to kick off with a story that seemed to come out of nowhere with Apple acquiring Credit Kudos. At first, to be honest, I think we all thought it was either fake or a mistake, because the first couple of stories we saw, the reference or the source as to how someone figured this out was the terms of service went to Apple's website. So I thought, is there some glitch? Is there just a technology foul up that caused this to happen? But then the block, I believe, was first with three sources saying that Apple acquired Credit Kudos for $150 million, which was significant uplift on its last funding round. The company provides insights and scores on loan applicants drawn from bank data. They've really made their name due to open banking regulation in Europe. And this is now the third open banking startup, first acquired by a big tech like Apple. Others were Tink and AIA that were acquired by Visa and MasterCard. So I guess, Kat, I ask you first, what is Apple up to?
Yeah, I think it's a great question. I saw it and I was like, why would they do this now? I'm assuming they have something, Credit Kudos has something in the tech or the team. But I wonder if Credit Kudos had like a little slight problem with their business model because, compared to some of the exits we've seen lately, I mean, again, 150 million is nothing to sneeze at, but just compared to some of the exits we've seen, I wonder if they had trouble with some of the product market fit or some of their unit economics. And so now seemed like a good opportunity to go to Apple. And then I wonder if on the open banking side, right, Credit Kudos had this technology to help to help Apple with whatever they couldn't figure it out. So it was worth them buying something for relatively inexpensive versus building it in-house. Things that I saw as like they might be expanding into buy now, pay later in their Apple Pay wallet in the UK. I'm not sure if that's true. But we'll see soon enough. Unless it was really just like a team and back technology play, in which case we won't see them. We can assume they just needed something more probably on the regulatory side.
And they're going to roll something out in 3 months with much fanfare, taking all of whatever the infrastructure is that they bought. I'm curious to know what that phone call was like. We're surprised at this announcement. Can you imagine Credit Kudos getting the call? No, really, this is Apple. Seriously. That must have been a bit of a shocker.
I mean, clearly Apple's up to something in financial services other than just the partnership with Marcus and the Apple Card. I mean, they're going to roll out more. I don't know what that is. Buy now, pay later seems like a natural fit for them. But, you'll probably see more, probably relatively smaller, quieter acquisitions until they're ready to go live with something big, and then maybe some big purchase. But I think it's just a sign of things to come. We probably won't know something for a little while, but it was a nice, interesting story nonetheless.
And I'd say kudos to Credit Kudos, because that is a solid exit. And I don't think they raised much money. So great exit to the founders and the investors there.
Moving on to our next story, FTX, which has quickly become one of the hottest crypto startups with a very eccentric CEO. There's plenty of videos and interviews with their CEO, which I find to be pretty fascinating. I think he's 29 or 30 years old now. He's got some crazy hair. But they struck a deal, a strategic partnership with Dave. They invested $100 million through a convertible note. And right now they're exploring potential digital asset offerings onto Dave's platform. And some of Dave's biggest backers, Mark Cuban, amongst others, FTX president. We consistently look to align with companies that share our vision, have unique and disruptive business models. Dave is a great fit that checks all these boxes. Kat?
I think it was super interesting. Right, you have a lot of these neobanks for underserved consumers. Dave is one of the ones that had a more successful SPAC where others have not.
Yeah.
And I think, how do they keep differentiating themselves into others when there were a lot of people like in the same space? So I'm going to be very interested to see how this partnership rolls, and if it like actually does work, and if Dave's consumers, actually want, to interact with crypto. It'll be interesting to see how it pans out.
Which of these, we've seen these kinds of partnerings and buyouts and mergers over the last 2 months, and everyone talks about developing the first real super app. Do we see reference to that in either of these two acquisitions, partnerships?
I think Apple's got a better potential for super appness just because of how vast and their technology is and how huge the company is. I mean, I don't see that for Dave. I think Dave, has started the ball rolling on the whole overdraft, switch in the market, or was one of the first there. Chime, obviously, another one. I think it goes to show you that a lot of consumers of all stripes are looking for access to crypto in some way. Whether it be, we'll talk a little bit more later. Robinhood came out with something new as well, where it seems like everyone wants to at least start getting tastes of crypto in some way. Not in these, the big way, but, it's going to be something that's becoming fast approaching, and people need to get in before they're behind.
It'll be interesting to see how much Dave's consumers want to play there. And it'll be interesting to see, even like the CFPB has been cracking down, especially like if you have low and moderate income consumers. I don't know how much they want them really to be interacting with crypto as well. So it'll be interesting to see on the regulatory front what happens. But I like that they're trying different things and trying to be different.
Yeah, there was something out, I think, this morning. We don't have a story on it today, but I think households that were lower income, or I forget the exact number, were more likely to use or abuse buy now, pay later to put themselves behind. And it goes to some of what the CFPB's already started to look into, which is those that fall, on the lower end of the income scale, and not letting products become too abusive. Next up, we'll stay in crypto, and we saw Catherine Hahn, used to work at Andreessen, has now raised $1.5 billion across two funds: $500 million early stage fund, $1 billion acceleration fund, saying, "We believe the next generation of internet deserves a new generation of investors." I saw with the announcement right now, I think there's only 9 team members. So they're going to need to scale up pretty quickly. I think a big piece of what they're going to do relies on her expertise in the regulatory area, which is what she used to do at the Justice Department. She led Andreessen's crypto strategy. So it was interesting to see what Andreessen does now, because it felt like the main Andreessen partners were stepping back and she was stepping forward, and then now she does her own fund. So that'll be interesting to see what happens there. But big move, and I think it's pretty historic in terms of a woman-led fund, raising this much for an initial fund. So I think there's some history there as well.
Yeah, I think it's awesome. Katie is just absolutely fabulous. And I think it's the largest fund ever raised by a female investor. Second to her was Mary Meeker, I think at like $1.2 billion. I know people were slightly controversial, like, why would she name it after herself? I think it's badass that she did, and she's very clear about like who's leading it and what's going on. And
Never seems to be a problem when the men, Andreessen Horowitz, who's that named after?
Yeah, no, I saw some stuff and I was like, wait, really? There's criticism to that? Like, I don't know. Like, I don't know. And I guess people are saying, well, Andreessen Horowitz then went to A16Z. So we'll see. Han might maybe eventually get a partner and it'll become some other cool numbers.
Yeah.
But I think Chris Dixon, right, was still active at Andreessen with their crypto and had run it with her. So I'm not too worried about Andreessen not being okay. I think they'll be okay. Yeah. And they have a lot of clout there. And I'm excited for Katie. And I think it's a great move for the, I think it's wonderful for the crypto industry. And there's not enough female entrepreneurs there. And the more female funders there are, the more female founders there are in that industry. So I think it's just fabulous news all around, and well deserved by Katie.
This is the latest, and I seem to recall there were at least 3 others who left a major firm to start their own. But by far, this was the biggest starting capital amount. So it was just stunning to see that. And I would suspect she would have significant impact on the discussions with regulators on setting the tone going into next year and finally getting this moving in a direction everyone can be comfortable with.
I agree that her regulatory background, right? Like, and she's studied it, and she's prosecuted all sorts of interesting people. But the fact that she, I think, is willing to work with regulators, understand where they're coming from, and has this large fund, I think she's, this will be a great one to watch.
And their first thought of her is not skepticism. It's, here's someone who knows, who's been down the road and knows what they're talking about.
Yep.
I think that'll really help that process move quicker.
Agreed.
All right. Next up, we have Ramp. So Ramp secured $550 million in debt, $200 million in equity, which doubles its valuation to $8.1 billion. Founders Fund, Keith Raboy. Ramp's an example where we invested early and continue to double down. I think they've now invested or led 4 straight rounds with Ramp, which is pretty odd. Close to a 10x bump in revenue year over year. They've started out focused on small to medium, but now they work with businesses of all sizes. And I think one of the things coming out of COVID that I think is news to a lot of entrepreneurs or businesses in many areas is the offerings that they now have are seemingly endless compared to what they had 3 or 4 years ago. There's Ramp. There'll be another one later that we talk about, Jeeves. I mean, there's so many more options for small business owners to go to for corporate cards, expenses, all that stuff to make them run their business significantly more efficiently than they ever have before.
Yeah, agreed. I think this is great for the whole industry, just right, like how there was Chime and Dave and Ernan and Bridget, and keep going. And then now the banks changed their overdraft fees. A lot of them have changed that structure, and I think it's for far too long that a lot of these small businesses were not being treated as well as they should. And now that people have other options, I think it might change some of the bank's behavior and value them more. And then if for some reason the banks don't want them as customers, so be it. They can go after large enterprises. But I think there's room for a lot of players, right? This isn't going to be like Uber or Lyft. Is it Brex or Ramp or, I think there's going to be a ton of people coming in, and they're going to specialize and bring different services to those small businesses. and they're going to target those small businesses. And so this is when I know a lot of people sometimes have been critical of fintech, but when I see things like this, I'm like, it's another win for like the small business and for the consumer. It's going to change the way the whole industry runs.
Do you think that the pandemic was kind of, the fire hose was kind of crimped for a period of time, and now the fire hose is open on all of this funding and announcements? Like Todd was saying, there was a flurry of activity when it comes to rolling out funding.
Yeah, I think it is. So first of all, I think that a lot of it's deserved, just watching some of our companies in these spaces and knowing how fast they've grown, right? Like the pandemic, especially the first couple months, accelerated some of these businesses, 10x, if not more. And so because a lot of the incumbents didn't have access to things where you could just do it online, they were still faxing things. You'd have to go into the bank, provide all this, and the startups made it so easy, right? They increased their customer base and the revenue base, more than they would have had the pandemic not had happened. And then with that, they needed more capital, especially like, as you guys know, when a lot of times when you take debt capital, it's not 100% advance rate. So you need some haircut capital, you need more funding. Fortunately, there's a lot of funds that are around right now that have a lot of capital. They're watching, oh my God, these companies are growing, more than 100% month over month. This is like the fast growing company. So they put more money and more money. I mean, the Conviction Founders Fund must have to, like you said, lead 4 times. Means they're watching, and they have other great companies. They're watching tremendous growth and say, hey, why would we stifle this growth? Let's just pour money, more money in and grow. So I think, for these types of companies, and again, I haven't seen, ramps back financials, but I've seen some other companies in the space. The growth has been tremendous, and some of the unit economics have been just really awesome compared to others in the space. And so the funding is well deserved, and then we'll see if the valuations hold up when they go public. Right. We know public markets have not been kind to lenders, so we'll see. Like,
Nope.
you have to, and this is where you said it's a full service bank. You have to be more than just a lender. You have to be a full service. You have to be a platform. You have to provide other things, because if you're just going to be like an SMB lender, we all know that's not going to work, and you can't justify an $8 billion valuation. So
Yeah, I mean, just go look at On Deck and Lending Club's history.
Yep.
Exactly. I mean, they went with all this fanfare, and now Lending Club is a full service bank, and On Deck was acquired by Innova, and Innova is now a consumer and small business lender, and I think amongst other things that they do. So it's it's clear that you have to move on from just being that one focused product.
Agreed.
Next up, Robinhood, which is certainly cashed in on its popularity during the pandemic. They have now announced a new debit card that will automatically invest in stocks and crypto as you spend. So this actually replaces the current card that they launched in 2019, which was a cash management debit card. The big new features for users to automatically invest in assets like stocks and crypto when spending money. No subscription fees, no account minimum, no overdraft, no in-network ATM fees, though it's not sure what network they're using. There is some, I guess, look at criticism regarding some of the algorithm and the random reward mechanisms. There's concern over how Robinhood entices traders to keep trading. And so, people are worried that this new rewards will kind of help fuel that and cause another issue. That remains to be seen. But it's another product that is trying to give people access to crypto in an innovative way, similar to how Acorns and others do it with roundups. And I think there's a few others that do it. And so, you spend 55 cents, you put 45 cents, and when it hits a certain amount, $1 or $2, whatever your settings are, it'll then invest it into something on your behalf. So interesting way to, turn the card around from what it used to be. But what do you think, Kat?
Yeah. I mean, you see this, we've seen a bunch of these, right, that are rounding up and giving to crypto, or there's a ton now of, like we have a company that does prize linked savings, and you can put your savings into crypto. And you've seen a lot of like wallets that allow crypto savings. So I don't think it's anything really novel. I think is Robinhood, right? You get why they would do this. They want people to keep investing, right? That's one of the reasons why they're offering rewards, right? You normally offer
Yep.
rewards to encourage use. That's the whole point of it, and I think there's again the fine line with the regulators going, do you really want people to be investing when they shouldn't be investing? So it'll be interesting to see if they try to crack down on that. Inherently, I don't. Again, from everything that I've seen in other people doing it, I don't think it's a problem, and they're using random rewards to get people to use their product more, and that's what people do. I think they're going to have to work with the regulators to make sure there's enough guardrails where people don't get over their skis and they can't get over leveraged, and they have to look at feel like some education process or like some like just how old are people. But what some people are using it for is legalized gambling. But honestly, people can walk into a casino and there's not really guardrails there. So I don't know. It would be great to just watch the regulators come down and go, okay, guys, here's what's inbound, here's what's out of bounds, this is why, and try to have some kind of like consistency across whether it's investing, any kind of trading, horse racing, casinos, sports betting. You should have a very similar kind of thing.
Yeah.
Yeah, I have to admit my eyebrow raised when I saw the words variable reward algorithm. It's like, what does that mean?
It's like a lottery. So I had no
Yeah.
idea until we were invested in Yada. I had never heard. I was like, well, what's a random reward? Like, why not just a reward? But like random rewards is actually a whole term that is like what like lottery companies do.
Right.
And it is like randomized. So you don't know what you're going to get. And so it's like a whole category of companies, which again, it was not a term I had ever been familiar with.
I would think the people attracted to Robinhood in the first place would be savvy enough to understand what that meant. So I think it's a bit overblown to suggest it's going to cause a bunch of gambling addiction.
Yeah, no, you're right. They're already addicted. So one more thing is not going to really push them over the edge.
Yeah, I mean, but I think the broader point, it's like, it would be nice for regulators to say, definitively, like, here's good, here's bad.
Yeah.
And it seems like they just continue to play some level of a game of, this is, so we won't comment on that, but we'll comment on this, or we'll enforce that. It would be nice to see a bit more clarity from regulators. Speaking of clarity and regulators, we had an op-ed from Dan Balofsky, partner at Claroscope, on how DeFi should suit up to succeed. The whole point of the op-ed essentially saying that DeFi, to realize its promise, in some way needs to connect to the traditional financial system. There was also a report out this morning from IOSCA, which is an international something security. I forget what the acronym stands for, that they were reviewing DeFi and said there was a lot of DeFi and centralized finance mixed with a lot of the protocols. And so they want to review, they'll put out a report, they'll try to create some more clarity around what they believe is right or what they believe is inbounds or out of bounds. But what I think the larger point, do you think DeFi needs to connect in some way to the traditional financial system?
Yeah, I mean, when something goes wrong, right, the regulators need to come after somebody.
That's the argument I've always used.
And the thing is, if you have these like kind of venture-backed DeFi things, and like someone is going to ultimately need to be responsible, I get the whole argument, it needs to be decentralized. But some of the question is, how decentralized are some of these organizations, and can you have a governance structure where it's fully decentralized? You can, to a point, but you could see why regulators aren't going to like that, because if there's an error, and invariably, no matter how almost perfect you are, there's going to be an exception, there's going to be a mistake, something's going to get fat fingered wrong, and you need to fix it, and you're going to have the regulators want to have someone responsible. So
yeah,
it'll be interesting who they decide, is especially if it is a governance structure where it does seem like it is truly decentralized. And then again, they can go after it in creative ways. It's just like Bitcoin, right? Like, you can maybe not actually go and stop the whole system, But could you go to someone's house that you knew are holding Bitcoin and either like, and I heard them doing this in Latin American countries, who knows if it is, can you force them, can you shut off their electricity system so they don't like do mining? Can you like go with them and like literally force them to hand over their keys? Let me tell you, in some of these countries, you definitely can. So I don't love, obviously we're not operating like that here. And I don't see us like, stealing people's currencies, but you know what you could do? You just go after the exchanges and you say, sorry, you can't represent that currency. Well, if I can't trade it, then I'm stuck. So maybe I still have my Bitcoin, but if I can't trade it and I can't get it in or out, I'm like really in a problem. And if I'm sitting here in the US, the only exchange I can use is like sitting in Russia, I'm like in a real big problem. So like, while it's funny because while they sometimes can't go after maybe the underlying asset or the underlying organization, they can go around to enough surrounding entities. And again, in some of these DeFi situations, because, and for good reason, I think they're taking outside investors, will they end up going after their outside investors if there's not a way to get in? But I don't think these guys are just going to give up and go, oh, it's decentralized, so we're not going to touch it. If it's hurting a consumer, especially a low-income consumer, like they're going to go after it.
That was what IOSTA, whatever the regulator organization was kind of hinting at, was they would look at those that have allocated more tokens to whoever they allocated them to, the outside investors. They were hinting that, yes, while technically it is quote unquote decentralized, there's some power structure in there somewhere that they can leverage. And so, it'll be interesting to see where it ends up. I do think centralized, decentralized, it'll play with one another eventually. But there'll need to be some recourse in some way, or else the regulators aren't going to fully approve it.
The token has to stop somewhere, as somebody said, and I totally agree.
We have just a few minutes left here. I want to skip to fintech startup Jeeves. So this similar with the company we were talking about earlier, Ramp. Jeeves raised 180 million, quadrupled valuation to 2.1 billion. Quadrupled that value in just 6 months. Another example of how competitive, lucrative corporate card and expense management category has become. They describe themselves as proprietary banking as a service infrastructure. Any company could spin up their finance function in minutes. And their real cachet, I guess, is that they connect to almost any financial apparatus in a lot of different countries. So if you're in Mexico, you can pay in pesos. If you're in Colombia, you can pay in their local currency. And so it takes care of a lot of the FX charges. And so this is a perfect example of, hey, they started off in one area and went right to infrastructure, and now have spread themselves wide in terms of revenue possibilities, that it's no longer just a lending startup.
Yep, goes right to what we're saying with Ramp.
Yep,
definitely makes sense. And again, kudos to them. It'd be great to see their underlying financials that could have the valuation quadruple so quickly. But kudos.
I saw there was a tweet this morning comparing a bunch of different lenders in how many clicks it takes to create an account. And that's one of the metrics now, is how little friction can you offer your new clients.
Yeah, that's a good point. But some of the things, like, you want a little bit of friction, right? To avoid fraud, and whether it's in banking, lending, insurance, if you don't want it too seamless, because that's, I think, when you watch fraud happen more and more. So it would be curious to see who ends up like most successful and the ones that are the quickest, like, what kind of their rates are for fraud, or like delinquencies or losses from fraud. Yeah.
And will you have to pay more for that speed as a cover?
And with our last couple of minutes here, or last minute, last story that we'll cover in the Wall Street Journal, banks can trump fintechs as zero rate era ends. This has always been a question in fintechs, is can fintechs continue to thrive as rates rise? Savvy investors should still seek fintech firms that have an advantage in tech or business model, but higher cost for equity capital as rates rise will make it harder to sustain money losing strategies.
Yeah. I mean, I think people use it as a customer acquisition tool, right? With these like higher interest rates. So it'd be interesting to see if like how much higher they can be and if you have to be proportionally, at 2% points higher. Not sure there. But I think a lot of these guys have already won and gotten their customers. They had their customer out in the door and it was an acquisition strategy. And once you have one of these accounts, a lot of them are pretty sticky. So do I see people going from, Chime to, one of these random banks just because the bank has the same interest rate? No. And in Chime's a bad example because they're not doing interest, but like, do I see them going from like one to a bank? No, you're so used to that, like perfect, you're used to a great experience. You're already hooked in there. I don't see you leaving. Now with new acquisition, it'll be interesting of how much like that price hooked mattered. But I think that's when you can do all other things like referrals or random reward referrals or whatever you might be. But I think the experience is that much different. And again, unless the banks give that experience and like really value the customer, I still think, obviously I'm biased, but the startups will still win a bunch of business.
That's my favorite thing about fintech right now is that they're forcing the traditional banks to up their user experience game because there's so many horror stories. You ask anyone about any traditional lender, they have a story for you that'll blow your mind. So that's my favorite aspect of fintech.
And with that, we're going to have to end it there. John, Kat, thank you very much. Happy birthday, Peter, once again. And we'll be back next week, same time with Peter, myself, and our next special guest. Thanks, everyone.
Happy birthday, Peter.
Happy birthday, Peter.